Hello, and thank you for joining us at the Power of Passive Investing. We have a very interesting guest today, a real estate investor, a sponsor, a syndicator, someone who's been in business for a very long time, but also has a very unique real estate investing strategy. Without giving all the details and secrets of Joel, I want to welcome you. Joel, welcome to our show.
Thanks, Alina. It's great to see you.
Thank you. Likewise. Joel, we always start with the interview sharing a little bit about themselves, their bio, their history, and so that our listeners know a little bit where you're coming from. So can you please share with us?
Sure, I'll give you the list. I'm 66. I've been in the industrial real estate business since I was 22, so that's 44 years. I live in the Chicago area in a town called Deerfield, which is a north suburb. Married, three adult children, four grandkids, and I've been doing the same thing for all 44 years. I started out working for a family that was not my family, but that I had met right out of college. When I went to Michigan, I graduated and I met this family. Their last name is Podolsky, and they are the greatest people. And they trained me, showed me how to do industrial leasing, management, and syndication for 10 years. And because it was a family, uh, three children, adult children, a father named Milt, and then the three kids, all in their 30s and 20s. And when I became 30, I decided I wanted to be a partner and I wanted to be part of the sponsor group. And as a family, I don't think that they really wanted another outside person to be part of it. They wanted me to stay, but I couldn't. So I went out and started my own business with three other guys, and we built up an industrial real estate brokerage business in Chicago with 26 brokers. And then we sold that to a company called Transwestern, which is out of Houston, Texas. They're international. And all during that time, while we were building the brokerage company, my partners, including my brother and who's David, and our other partner Dave, uh, were buying industrial buildings as we went along, and we ended up before the 2008 GFC having 50 industrial buildings that we syndicated with 300 investors. And then I got hit with the GFC, and it was like a spiral downward into hell. I had loans on every building. Of the 50 buildings, 10 of them were either in trouble or they either went vacant or the tenants couldn't pay the rent. And I ended up having guarantees for $70 million at seven banks. It was
That's
not a
incredible.
good time.
No.
So I fell into a really deep depression. I think uh, I was as low and as bad as you can be without taking your own life and saying it's over. It was that bad. I thought I'm gonna have to sell my house. I'm gonna have to change everything I do. I'm gonna have an article in the local Chicago business paper saying Joel Friedland fails spectacularly, and it was all really difficult. We had done a lot of good things for a long time, but 2008 was bigger than all of us. And I went back to work as a broker to make a living as an industrial real estate broker and did fine. And then I turned 60 and I still had 30 buildings. And I decided it was time to go back into buying and owning buildings and being a syndicator again. So in 2018, I got back into it. And since then, have only been buying buildings with either zero debt, totally debt free, no mortgage, or with a maximum 30% loan to value ratio. And I prefer 20% rather than 30% because I even think 30% is too high if things go bad. So I'm super risk averse. And I found a small universe of investors who are like minded. And there's about 80 of us in our group now. And we go out and we buy small industrial buildings. They have to be a certain type of building in a certain location, all in the Chicago market, under 30,000 square feet. And we just are super cautious. We do great due diligence because if you miss something, it bites you. And that's what I do. That's the background.
Wow, Joel, that's amazing. And you pretty much summed up and answered all the questions I had in the show. So show's over. I'm just joking. Thank you so much for full transparency. Really appreciate it. I can't even fathom how difficult and heartbreaking it must have been to have 70 million in debt and, have your own personal life and family and going through that experience. If we can dive a little bit more into that from the lessons learned perspective, things that you would recommend a younger self not to do if you had that exposure. So can we start with that?
Yeah, my younger self was a risk taker. And I think when a person's younger, they can afford to take risk. I don't think I would
Sure.
have done much different. I think maybe if I had thought about it and thought, gee, one day there's going to be this gigantic global financial collapse. And if I have 65 or 70% loan to value ratios, I'm going to be screwed. If I
Mm-hmm.
thought about that, I might have done a lot less debt and I might have bought smaller buildings and different buildings of a different profile. The ones that I got in trouble with all had four things in common that I am not doing anymore. I learned my lesson. A, too big.
Mm-hmm.
Big buildings are hard to carry when they go vacant. Smaller buildings are easier. Also, for the smaller buildings, there are more tenants and more buyers. The bigger the building, the fewer there are in the funnel of potential occupants and people that are interested in that size. We tried some development. I'm not doing any development. That is a risky business. I went to a seminar where Sam Zell was speaking, and I met him briefly. And one thing he said was, never develop, only buy existing. You'll buy under replacement costs, and it's a lot less time and a lot less risk.
Yep.
I should have listened to him. I said, sure, sure. And then I went out and developed buildings. It's like, like the thick skull didn't hear the message from the genius. Uh, yeah,
We
good.
all learn from our own mistakes. I mean, you and I both have kids, and you know it really well. You can tell them anything you want, but until they try and until they get burned at least once, they're not gonna listen.
Yeah, yeah. The other thing is too much debt. And the other thing I did is I tried to do some deals in other markets, and some of them worked out great and some didn't. But what I learned is if you don't have a presence in a particular market, the local people do. And so we come in as sort of like a foreigner uh, in their world of understanding everything that we don't understand anything about. So I did
Yeah.
a deal in Ohio, in a couple in Florida, and one in New York. One other thing, pick your partner as well. My partner in Ohio was my ex-brother-in-law.
Oops.
Yeah, it didn't work out well. And I can tell you, he's a good guy, but he was not a good partner.
Was he ex-brother-in-law at the time you partnered with him?
No, no, he was very much my brother-in-law at the time I partnered with him.
Makes a big difference
I
as well.
split up with him, and my sister-in-law split up with him. And he's a good guy. So, but not a good partner for me. So
Sure.
those are the mistakes that I made. And now the most important thing is to follow my principled guidelines, which are no debt or very, very low debt, know my market inside out. This is going to be shocking to you. There are 16,000 industrial buildings in Chicago.
Wow.
Yes, there's 22,000 industrial companies. It's one of the top three industrial markets in the country.
Hmm.
I'll never run out of things to do with 16,000 buildings. I couldn't
Of course.
possibly know all 16,000, but I have narrowed my list down to 700 buildings of the 16,000 that I would buy. And the other 15,300, I want to have nothing to do with. They don't meet my profile. They're not good enough for um, my buy box. They don't fit. Well, it's really easy when you only have 700 buildings because that means I can call 700 people who own them and ask them if they'll sell me their building.
Exactly, Joel. And I was just going to say that you pretty much made your job a lot easier by focusing only on those 700 buildings and not looking at anything else. As you were sharing your journey and your new strategy, or not so new since 2018, I was thinking more and more about the books I read on multiple billionaires, as well as what I heard at multiple family office events from Richard Wilson. The more you focus, the easier it becomes to achieve your goals. And you pretty much summed it up well by saying not only you focus on a specific geographical location, but you also focus on an asset class. And within that asset class, you have an even more narrowed down criteria in terms of only the size and only in this location. And out of that, whatever you said, 15,000, you only want the 700, which I think is absolutely incredible. And I wish more people would pay attention to that, because only with such extreme focus, you're able to achieve your goals much sooner than
Wait
others.
till you hear how much more I narrowed it down to get to the 700. There are 50 towns, villages, cities in the Chicago area. There's
Hmm.
that have industrial,
Okay,
and I will only buy properties in about 20 of them. There's 30 of them I won't even go to. Won't even go
incredible.
there. No interest.
So I'm sure within those 20 towns, you made them know who you are, what your company does. So they're aware that if in any case any of those 700 properties become available, you're on the top of a list of people to call to.
So here's something really different. I'm going to talk to you about something very personal. My
Please.
wife just went through a year of pancreas cancer treatment and surgery.
Oh, I'm sorry. I'm sorry.
And there's a 13% survival rate for that disease after 5 years. 87% of the people die. And her mother had it and her grandmother had it, and they both died from it. So when she was diagnosed in her early 60s, it was very scary. And my sister-in-law, who is the one divorced from my ex-partner in Ohio, and I took my wife to meet 5 sets of pancreas cancer teams, surgeons, oncologists, the people who do radiology for cancer. And we interviewed these teams. And what we did is we had to, this is life and death. You know, real estate's not life and death,
Great.
but we had to choose of the 5 teams, which was the best one. We chose a team in Milwaukee, a doctor by the name of Doug Evans, who has a team that is incredible. He's got an oncologist that he works with, Dr. Kamgar, and he's got this incredible team. He only does one thing: pancreas cancer surgery. He doesn't do anything else. And he speaks at conferences, and he's part of a large foundation that supports people who are survivors of the disease and people who have the disease. So, what did we do? We picked the expert. That's my model. I want to be, I'm never going to be a surgeon, but I want to be able to tell my investors and my sellers, I do one thing. I've been doing it a very long time. And if there's something I don't know, I'd like to learn it fast. But I know an awful lot about industrial real estate in 20 towns in Chicago under 30,000 square feet. And this past summer, we had 6 interns. And I said to them, we're going to this town called Wooddale, which is a town that has 9,200,000 square feet of industrial. That's 202 buildings.
Mm-hmm.
If you take 6 interns and you divide up 200,000 or 200 buildings, each intern gets 34 buildings.
Yep.
We went to that town together. We drove there, and they went door to door to the 34 buildings each to find deals to buy in that town, because that's the town where I'd rather buy industrial buildings than anywhere else in the Chicago area. This year, we bought 2 there.
Incredible.
Incredible.
That's absolutely amazing. Joel, first and foremost, I hope your wife is doing better, and I hope she's on her road to recovery. That's the
Yeah,
most important thing.
thank you. She's doing well.
Okay, great. Happy to hear. Second of all, I rarely meet people with such an extreme focus, and I think what our audience would benefit the most would probably be if you could share with us your journey to deciphering this road. How did you end up thinking that way and deciding that not only I need to focus on asset location, but also continue narrow down my focus? What led you to this road?
It's so funny. I have this, I call it the parking lot theory. If you go to a very, very crowded parking lot at a mall and or anywhere, and there's just a sea of parking. If you drive around and around and around, you don't know what aisle you're going to end up in where someone's walking out and is going to go to their car.
Yep,
You're just wandering around, and you're hoping that as you're driving, someone will be pulling out. The other way to do it is to hog the aisle. You pick one aisle and you sit there waiting, and the next space in that aisle is your space. You're going to get it. There's none of this. I'm going to get lucky by driving around. I'm going to focus on this aisle, and as soon as someone pulls out of a space, I'm in that space. That's
sure.
that's how I decided to do it. I actually based it on when I went to Michigan to college. I had a car there, and there was this giant parking lot when I would drive to school on a cold day. And I
Mhm.
did the parking lot theory of waiting for a space. Now, sometimes somebody else will grab the space because they're waiting at the other end of the aisle. And I look at that as the same as real estate. That's when someone else is trying to buy the same building I am, and they're focused on the same thing I am. And so I need to get there first. I need to be faster and smarter to get to that seller before they do. And then
Makes
convince the seller that I'm the better buyer in case they do show up.
makes sense. I love it. I actually, in a large parking lot, I usually go to the furthest spot because I assume people are lazy and they want to be the closest. And I also don't want my car to be scratched, so I try to find the furthest and just park there if
Yeah,
available.
everybody's got their parking lot theory,
Yeah,
but
absolutely.
it's sort of it's a metaphor for my real estate theory.
I get it. I get it. I love it. And thank you for sharing. Hopefully, it'll shed some light for our listeners, whoever wants to start their journey in real estate or already in process and just doesn't know how to focus. And I think this is very helpful. Now, you also mentioned something that I think is very important in terms of picking up your partners and knowing who your partners are. And in any relationship, whether it's professional or business, it always comes down to trial and error. And in your 66 years, you've had a lot of experience on both ends, and it sounds like you had a lot of experience on business end as well. These are not your first four partners that you partnered with and worked with. So in your long journey of 44 years of professional career, what do you think were the most effective ways to select the best partners to work with?
That's the greatest question in the world because it not only applies to business partners, it applies to your spouse or your significant other, and it applies to your friends.
Of course.
So my background is I come from two parents who are therapists.
Okay.
And my
I'm
daughter is
sorry.
a therapist. So what I've learned over the years, and I've done a tremendous number of mentoring. Uh, I've just mentored, literally not kidding, probably 150 people in real estate and very intensive mentoring. When I had 26 brokers, I trained almost all of them, or they were trained by someone I trained and they were the trainee. And these people are all from all different walks of life and all different ages. What I learned from my parents is ask great questions, drill down, get to know somebody. If you ask them difficult questions and they're afraid to answer, Alexei actually said this to you. I heard him talking to you. If someone is talking to a sponsor and asks tough questions, and the sponsor either doesn't want to answer or doesn't know how to answer, that's the wrong sponsor.
Yeah,
It's all in the question asking. So I ask these probing, deep questions about values. I even talk about their mood. I want to see if there's a mental health thing going on because mental health is such a big aspect of everybody's life.
absolutely.
Everyone's got someone in their life that's either screwed up or feels bad or they're depressed or they're elevated and doing crazy things or they're on some kind of drugs or drinking. I mean, there's so much in life. I want to find out about somebody before I partner with them and see what of those things affects them so that I know what my next step is, how much to trust them, what my agreement needs to be, how decisions are made. And so those are the keys. And I dive really deep into personal, really deep. Uh, my first question is, I know this is a strange question, I'll say to them, but I'd like to understand your mood. I'd like to understand what drives you. If there's a scale of 1 to 10, and 1 is very, very depressed and feeling bad about things all the time, and 10 is you're so elevated that you're unrealistic and you think you can do anything, even though, like, you think you can run for president, even though you're 30 years old and you're working in an accounting firm, right? Um, Someone who's super elevated, I call that on my scale of 1 to 10, that's a 10. And someone
Hmm.
who's super depressed, that's a 1.
Hmm.
When I ask that question and I say, if you're a 5, that's really solid. That means you're probably mentally very healthy. 6 is a little too happy, a little too elevated. You might make stupid decisions by not thinking something through. And 4 might be not being able to get off the bed in the morning and being just a little too low to get things done. I want to know. I want to know the person I'm dealing with, what they are most of the time and where they are today. And when I ask that question at lunch, people are taken aback, like, huh, I've never thought about that. Hmm. Well, I've thought about it because the ones who get you in trouble are the high flyers who make stupid decisions and the ones who can't work because they can't get out of bed. So having somebody in that really safe zone of mental health is extremely important in picking a partner.
That makes sense. But wouldn't you say it is also age related? You said it yourself. When I was younger, I was a lot riskier. And I'm sure if you were to ask your 20-year-old self versus your 40-year-old self, the answer on that scale would be drastically different.
Yes, I was a giant risk taker at age 22, for sure.
Yeah, yeah, I can tell. And that will definitely influence their response to you about your scale.
Yeah, Steve Podolsky used to have to say no to me 5 times a day.
I love it. I love it. That's how.
Today, by the way, he's still a very close friend, and he hasn't said no to me since yesterday. And this is
Excellent.
44 years later. I sent him one of my PPMs, and I said, "I need you to read this." He says, "No, I don't like what this says. Change it." That's after 44 years. He's still my mentor and is telling me no.
That's excellent. That's because he's still your mentor and because he still loves and respects you. That's why he's helping you,
Yeah, I
which is
love him.
incredible.
Yeah, I love this guy. Yeah.
Yeah, Joel, I hear you about selecting your geographic area and narrowing down your focus. Some people may say Chicago. Why Chicago? Chicago probably has a lot of dangerous areas. What would be your response to that?
Every metropolitan area that's a city has dangerous areas. That's just how it is. Chicago just has more of one because it's bigger. And
Hmm.
so I stay out of those neighborhoods. I talk about where I go and where I don't. In Chicago, there are wards that we break it down into wards. And there are wards that are super safe,
Hmm.
wards that are super dangerous.
Okay.
I have a friend who bought a $4 million building in a dangerous area that turned into a good area, and it turned into a $35 million sale within 6 years.
But he did not know it was a good area at the time because
It
it
was
wasn't.
horrible. No, no, he got lucky. So I'm not looking for like that home run going to that bad neighborhood. So Chicago's got, and you can get in trouble by walking 3 blocks the wrong way.
Hmm.
But the suburbs are clean and gorgeous. And they're parts of the city along the Chicago River. We have 3 buildings right on the Chicago River with 1,200 feet of frontage. And
Hmm.
it's where people want to live. There's young families. It's fantastic. So, yeah, it does have a reputation for crime, but if it was smaller, it wouldn't have such a reputation because the crime would be smaller relative to the number of people in other places. Now, I would like this is really radical. This is radical. I would like Trump, instead of what he's doing with immigrants, to send those same people to the bad neighborhoods to go after the gang members with the guns. But you know why they won't do that? Because that's too scary,
It is too scary.
right? They go after the easy prey. They go after the landscapers and the people working in restaurants right now. I don't know when this is going to be watched by someone in the future, but at this time, if someone's watching later, it's really important to state that we're in that strange period where immigration is being handled in a way that I think is just it's irresponsible and reprehensible. And if someone's going to clean up a city, they need to clean up the gangs, not the immigrants. And so
I,
that's where I'm coming from. And I love Chicago. If the weather was better, it would be the biggest city in the country.
I hear you, and I do love your strategy.
And there's two
Now,
other things. Can I tell you two more quick things?
please go ahead.
Chicago's also geographically the midpoint. So all the rail for industrial
Hmm.
goes through Chicago, and all the trucks go on Route 80 through Chicago. So it's where companies have to be that serve the Midwest, or that serve the East or the West Coast, or the down south, or Canada,
Hmm.
because it is such a central location. And we have unlimited natural water, which is not everywhere.
Oh, wow,
Lake
that's amazing.
Michigan is the Great Lakes give off a lot of really good water. And for food companies in our buildings, they use a lot of water.
I'm sure. I'm sure. That's great. Since you mentioned food companies, in terms of your tenants, do you have specific industries that you serve, or they pretty much come from multiple walks of life?
So we're currently negotiating with a company that makes dog treats. They bake dog treats.
Okay,
We have a company in one of our buildings. He was on Shark Tank in year one, and he makes protein bars.
nice.
Yeah, and we've over the years had many other food companies, and uh, I work with a company now that makes cheesecakes and makes the Rice Krispie treats that you find at Starbucks on every Starbucks counter where you pay for your coffee.
Oh,
They
wow,
they
nice.
make like 14 million of those a year in their place. We've got manufacturers who make precision metal products that go into aerospace, airplanes, cars, tractors. We have one tenant that makes pumps and motors for old tractors. Uh,
Very good.
we've got a company that we just unfortunately had a problem with financially. First one we've had in years, and they made children's museum exhibits. Really wholesome, great. And we have charities. We have a company called Feed My Starving Children, where people, church groups and school groups come and they pack food in the warehouse and
Mm-hmm.
send it overseas to starving children. It's amazing. It's beautiful.
Very nice.
Yeah.
Very nice. I love it. So when it comes to tenants and buying buildings, is there a threshold in terms of vacancy that you look at, or you'd buy 100% vacant building?
At our size, it doesn't matter if it's vacant or not. We're buying the building for the inherent value of the building. And because I was a broker for so many years, and I know there's 300 industrial brokers in Chicago, and I know them all, and they all know me, and it's a community. When we put a building on the market that's vacant, tenants come.
Very nice. Uh, so do you always go to brokers, or do you try to find the tenants yourself?
We always go to brokers. It's a broker controlled market. There's an organization called SIOR, which is the Society of Industrial and Office Realtors. And many of the brokers in industrial here are members of that. And we have a group that's called AIRE, AIRE, which is the Association of Industrial Real Estate Brokers.
Mm-hmm.
It's a community of people. We have lunches together, we share information, and we bring deals to each other's properties.
Mm-hmm.
So I work with them every day.
Amazing. I love it. When it comes to financing buildings, you mentioned that your strategy fluctuates anywhere from buying them all cash versus maybe getting financing for 20 to 30% or ideally 20% max. How do you decide on which strategy you're going to
I
use?
have a rule. I do 3 out of 4 all cash, no mortgage, and I do 1 out of 4 with a little bit of debt, just to make it a little bit of a better return. Again, Steve Podolsky, my friend who says no, I said, Steve, we bought a building in Wooddale that one of the young guys found. And I said, Steve, this is a $4 million deal. I want to buy it all cash. And he said, this one we're doing with debt. We're putting an $800,000 loan on it. So it's 20% loan to value. I said, I don't really want to. He says, I'm saying no to you. We're doing it. We're putting debt on this one. And so we had a little Zoom call with a bunch of the investors and we talked about it. It's not that we voted, but Steve's very convincing, and they all said, "Yeah, Steve's right on this one. Put the debt on it."
You have a call with your investors where you ask for their feedback?
Yes, yeah,
Wow, that's incredible. That's definitely a first one. I don't think I've heard anyone do that.
we do a Zoom call on every deal. When we invite who we hope will be the most thoughtful investors, and then the ones who don't know as much listen in.
I see. And do you do live calls only at the beginning when you planning to buy the property or during the ownership? Got
We
it.
just at the beginning when we're doing our due diligence, we want if we missed a question, we have one investor who's a civil engineer, and we were buying a building and he said, "Where does the water?" He looked at the Google Earth map, and he said, "There's like a little stream or a river behind." He said, "It looks like that's where the storm water goes to." I said, "It,
Mm.
it is." He says, "Have you done a civil engineering study to make sure that the angle of the land in the back is adequate and there won't be flooding?" And it
Oh,
was great
wow.
to have him on the call. I said, "No, that's a great question. I didn't think of it."
That's an excellent catch. Got
Mhm.
it. Well, that's a great idea. I was going to ask you something else, but it slipped my mind. In terms of the properties, what is your strategy? Do you hold for a long time?
Really long time. I have a deal right now where I've got 130 investors in 10 buildings from way back when I was buying a lot of buildings before the GFC. And these are the buildings that withstood the test of time. They're really good little buildings. And I'm I went out to the investors who've been in these buildings with me
Hmm.
since 2002. We bought them 2002, 2004, 2006, and 2008. And there's 10 buildings. And I'm doing something that's very unusual. I'm giving the existing investors an opportunity to sell their limited partnership holdings. And I'm giving a new group of the existing investors and other people an opportunity to buy them out. So what it is it's a liquidity event that I'm orchestrating so that these people who've been in for a long time on a building that we're not planning to sell anytime soon can get their cash out if they want to go do something with it, if their estate plan has changed. In some cases, their dad was my partner and he died and he left. He had, let's say, dad had a $60,000 investment and he had 4 kids.
Hmm.
4 kids, and they end up owning $15,000 each of a building. Well, if you're very wealthy and you got a $15,000 investment, you got to look at it and say, why do I have this? So I've gone to people whose estates have changed or who sold a business, and now a $60,000 investment to them is too small. They only invest $1 million at a time or something. And I'm giving them the opportunity to get out and other people to take their place.
Amazing. I think that's incredible opportunity. Good for you that you're making that happen.
It's
Uh,
hard. It's hard work.
I'm sure it's not easy, but I'm sure all your investors appreciate that. Joel, where do you find your investors? Where do they come from?
Almost all referrals. I have entire families. I have one family where the father started investing with me in 2005. He's got 3 adult daughters. They invest in every deal, as does the father. And guess what? So do the grandchildren.
Wow, that's
That's
impressive.
something, yeah. So in
That's
one
impressive.
in one family, I have in that family, I've got 12 investors.
And do you typically advertise your deal or are they 506B?
They're all 506c. We do advertising.
You do advertise. Got it.
Yeah,
Excellent.
we have a new full-time marketing guy, Dominic, and he's really great. And so he puts together decks and he puts together the PPMs and flyers and all that.
Excellent, excellent. In terms of the returns, since you're buying everything, or for the most part, everything cash, would you say that your returns are hurting because of that?
Well, yeah, I've heard people say that it's a double-edged sword or it's like lighter fluid. I've got a friend in the business named Paul Shannon, who's one of the greatest guys in all of syndication. He's the best.
I know Paul well.
Yeah. So Paul asked me a question. He says, "What do you do when people tell you that you can't make giant returns without leverage?" And my answer is, I'm not looking for giant returns. I'm looking for not losing any money with a steady return. And his way of putting it is lighter fluid is good for the barbecue. It sizzles the steak, but it can also burn the house down. That's
I
Paul.
love it. I love it.
So the answer is we don't look to sizzle the steak and we don't look to burn the house down. We just want to cook the steak very slowly and carefully. Our minimum return is almost always 7% yield, cash flow return. So if
Hmm.
someone puts in 100,000, they want to get 7,000 a year in cash flow, and we distribute quarterly. It usually goes up every year. Industrial deals have built-in escalators, some with the CPI increase, and some just a set either 3 or 4% a year.
Oh, wow.
So if it starts at 7, we're looking at a deal now that if we had it for 7 years, it would average 8. By the time you get to year 7, you're at 9%. So an all cash deal averaging 8 over 7 years isn't so bad. And if there's appreciation and the value goes up, we try to make between 12 and 14% average annual returns over a hold period.
That's great. And do you, in your newer deals, do you give your investors an opportunity to exit if they would like to at some point?
That's what this thing is that I'm doing now. Yes, I have a mix and match program. Someone calls me and says, Joel, I'd like to get out. I can usually get them out in a week.
Oh,
Because what
wow.
I do is I'll call someone in the deal and I'll say, you've asked me if I ever have more of this deal, you'd like it. So this one fellow, Ben, called me about 6 months ago and he said, Joel, I have $50,000 in your trip deal. I'd like to get it out. I said, okay, no problem. So I made a call and called Ken and Ben, they rhyme. And I said, Kenny, how would you like to buy Ben out for 50,000 on the trip deal? He says, I'll take it. So just like that, I get a check from Ken to Ben. I'm just a facilitator,
Yeah, or I would call it a matchmaker.
a matchmaker, make a shidduch.
That too.
Yeah.
Excellent. I love it. And so you mentioned that 50-50. Are you not going to determine the new value of that investment since some time already elapsed?
Well, value is the hardest thing to deal with. I sent my brother. My brother's a broker at Cushman and Wakefield. He's an industrial broker. He started out being my partner in our firm. And I sent him yesterday the package with the 10 buildings. And I said, we're valuing them at $100 a square foot. So it's 300,000 square feet. It's 30 million. He
Mhm.
says, if people stayed in, they'd probably get more in the long run, right? I said, yeah, but I have to value it at something. So buildings here used to be $60. When I got in the business, they were $35, $40 a foot.
Oh, wow.
And then they went up, and then in the GFC, they went down. But now they're worth anywhere between, depending on the location, $70 to about $130 a foot. So what's the midpoint between 70 and 130? And 100 is a nice round number. So they might be worth 95, they might be worth 107. But for this particular situation, I'm telling the old people that the new people will pay $100 a foot to get in.
Makes sense.
But it's really guesswork.
Yeah, a lot of it is guesswork, but having some sort of broker opinion of value helps. At least it makes investors more comfortable with the process moving forward.
Yes, exactly.
It makes sense. Thank you. Joel, I probably have about 100 more questions for you, but in the interest of time, we'll probably have to have part two at some point in the future. But at the end of each interview, we typically ask our interviews two personal questions. First one is, how can our audience reach out to you?
We have a website. It's Brit Properties, BRIT with one T, properties.com.
And they can reach out through your website.
Yeah, we have a contact us form.
Excellent. And our second and last question is, how do you like to give back?
Oh boy. Um, it's really something that you probably haven't heard before. I like to landscape at my kid's house.
Oh, wow. That's amazing. I'll tell my kids too that you like to do that.
I do a lot. Yeah, tell your kids. I actually, in giving back in terms of society, I'm involved in a number of charitable organizations that are heartwarming. We have tenants that we donate to. We have a tenant that does a makeover of people who live in the city who are in unfortunate situations where the kids might sleep on the floor and they might live in a sort of an old bad apartment. And this group gets furniture donations and they make over one apartment or one house for a deserving family
Mhm.
every week. They just
Oh,
they just moved into one of our buildings. So I love going to the galas. The Feed My Starving Children, our other tenant. I love supporting our not-for-profit tenants. It's the best.
that's excellent. Thank you so much for doing that. That's amazing. Joe, this has been an incredible interview. Thank you so much. And like I said, to our listeners, we're definitely having a part two at some point in the future. Thank you so much, Joe.
Thank you.